welcome to Trading Journal YouTube channel. I'm a swing trader and I focus on three setups mainly. First being VCP, second is a stage 2 or a stage 2 breakout, you can call it, and a third is a pullback. And all these stocks should have a good RS. So before we get into the stock, we have to look at the index first. And the Nifty 500 index is a broader index that we do look at. So if I talk about the index situation currently, I can see a cup and handle, and I notice that the index is taking support from 20 EMA over here. The candle is not very promising, but let's see what happens in the daily time frame to get a more clear and more recent perspective. If we look at the daily, we see that the index is mostly sideways. The breakouts are not very big. For example, a breakout happened over here, but it didn't sustain. Now, again, the index is sideways. Now, what I'll be looking for is a breakout from over here. If it gives a breakout from over here, I think I'll be again slightly more bullish. Currently, I won't say I'm bullish. I would say I'm somewhere in the middle, probably neutral zone, you can call it. And over here, if you look at this is quite an important support for the index because it has jumped off from here three times now, one, two, and three. So if it breaks this zone, I will be pretty bullish. And of course, if this zone is broken, then I will be more confident in the bullishness. Okay, so this is about the index. The next thing I check before moving on to the stock is the breadth of the index. So for that, I go onto the money control website, and over here you can see Nifty 500, 387 stocks are increasing and 111 are declining. So this gives us a pretty good breadth, which is above 3, and anything above 1 is pretty good. So this is also a bullish signal in a way. Then we can move on to the stock. So today I would like to talk about Shriram Finance. How I found this stock, I have my screeners built. So screener that found this stock was the stage 2 breakout screener. And over here you can see that the stock was consolidating and then it gave a breakout. So when it gives a breakout and goes a pretty long way, with increasing volumes, if you notice, we call this a stage 2 and this consolidation a stage 1. So stage 2 started essentially from this breakout, and you can notice the volume that this candle carries is also significant. Now, if we go into the daily time frame, we will notice that after giving the breakout, the stock hasn't been in momentum, if I would call that. Yeah, because if the stock was in momentum, the stock would have gone like this and not in a choppy manner like this. So now this gives us an opportunity because the stock did not break out, it consolidated in sort of a VCP manner. We can take this candle to be a breakout. Also, look at the volume that this candle carries. It's more significant and bigger than this breakout. So this does tell us that the stock might be coming into momentum soon. So what my plan is? My plan is very simple. I'll keep my stop loss below the previous contraction low. So this is the previous contraction low, and I will keep my stop loss below this level. And since the market is choppy, as you saw the index, it's sideways and not very bullish. I will exit some of my positions at 1.25 RR, and post that I will be trailing the position from 20 EM daily time frame only. And let's say the stock did not move up and it started coming towards the downside. In that case, I will be happy to take a stop loss. It's not a very big position that I'll be making in the stock because I will be only risking 0.5% in one stock. So we have discussed there are two possible positions. One would be when it falls towards the stop loss, and the other, if it moves up, how I'll be trailing, what will be my first target. Now, the third case, which very few people talk about, is if what if this goes sideways? It can move sideways just like this. Now, what will I do in that case? I will notice the pattern that the stock is making. For example, if it went sideways just like it did over here, I will again look for this breakout opportunity and enter the second time as well with the same quantity. However, if the consolidation is more towards the downside, then I would not like to add a second position even if the stocks breaking out, because it showed me that the consolidation is going towards the downside. So the bears might be strong and the breakout might be a bull trap. So that's what I'll do if it goes in the sideways direction and gives us a breakout. I will be entering on the breakout candle. Now, just to clarify, the stop loss for this candle will be this position will be staying over here only, and this second entry I will be treating as a separate position. So the stop loss for this candle will be below its contraction low. For example, if we consider this is contraction low, then I will keep my stop loss over here. And when it reaches this 1.25 RRR, the first position, I'll move my stop loss to the entry position. And similarly, when this second position reaches 1.25 RR, I'll move its stop loss to the entry position. So in this way, I won't be at a risk of losing anything once I reach the 1.25 RR, and I will also be booking some profits. So this is it about the position and my plan that I will be taking on Monday. Just a disclaimer that this is not an advice. I am not a SEBI registered RA, and this is just my personal view, personal opinion. If you like my analysis, you can like, comment, and subscribe to the channel. I'll see you guys in the next video. Thank you.